All right, so welcome to another video. Today, what we're going to do is we're going to go ahead and check out Veru, and Veru. It's starting to break out. It's more of a speculative stock, but I'll give you some takes and insights. Definitely check out our website here at tradersfly.com. You can see some of the other classes we have upcoming, all about trading, option trading as well. It's more in depth when it comes to option trading. And then if you want to check out the Discord channel, which is more like a chat room, sometimes I post charts in here as well from the technical side where you can see some breakouts and things like that. All right, so let's get started and let's kick things off. We're going to go ahead and check out Veru. Now, Veru is more of a speculative stock, and the reason I'll tell you it's more of speculative, number one, it's cheap. There's also very light volume when it comes to trading this. So if you take a look, a million on average here, and then we have this explosion here at 48 million or so, really 350 million the day before. So how do we trade something like this or these speculative stocks? So one thing I'll let you know is regarding these types of stocks, when you start looking at movements like this, they are extreme and they're massive. So it's tough to get in front of them to short them. So you definitely want to do things defined. But when you're doing any kind of trading on speculative stocks, remember, if you've got a portfolio and you've got different types of things that you're doing, like let's say you've got long portfolio, like investments, you got some ETFs, you've got some options, non-directional or theta. And then this little sliver, this tiny little sliver, maybe right here, you might have, let's say, some speculative trades. So if you've got $100,000, maybe you're putting in $3,000 into something like this to trade, something small. And that is because you don't want to put all your money into these speculative stocks because you don't know which way they're going to move from they'll whip around. It's not like buying a Microsoft or a Netflix or something else like a bank stock. They are a lot less stable. They'll whip around, but the return can be substantial. So when you're doing speculative stocks, what you'll do is you'll place a few coins or chips in different spots. Okay. And let's say I put 1,000 here, 1,000 here, 1,000 here in each one. So there's like maybe $5,000 to $7,000 used. Now, a lot of these will probably be losses, but maybe one or two of these, you get 20 times the return. So that means like all these losses are not a big deal because, you made 20 times the return. Now, it could be 5 times, it could be 10 times, but you're looking for exponential returns and growth. So when we're looking at Veru here, what I want to show you is that just like in the past, these stocks do explode very quickly. And note here, this is more of a logical run up, okay? And then we'll sell off. So we'll always run in, and then the faster we run, the more we'll get that pullback. And you can look at any cheaper stock that does this. Again, you get an explosion and then some digestion, explosion, and then the further it comes back to kind of the average. So somewhere over here. Now, it may not happen right away. It takes time, but this is what they do. Anytime they explode, they'll usually pull back. Okay, so that's what I'm expecting, the same thing here. And you can already see we had this explosion here at the beginning. We'll probably pull back. Now, does it mean tomorrow? Probably not. Does it mean the next day? Maybe not. I don't know. But when you have that big of a move, that's a huge move. And it could run like this for, let's just say a couple of weeks and then pull back to maybe that average. $10 is usually a critical zone. And I know a lot of people are going to be super bullish on this, but unfortunately right now, I think we've actually already missed the move. From a trading perspective, I look at it as, hey, probably missed the move. Only because it's too far, too fast. The way I would get in this, if you want to be bullish on this, the way to get in it is more or less let digestion take its course or wait to see if it comes into this $10 range and kind of hangs out here for a bit. And by a bit, I'm saying a week or two, and then it continues to run up there. So that would be maybe a bullish case scenario. Another bullish case scenario, let's say we take this level right here. The stock pulls back quite a bit, bounces, and then again, it powers higher. And that's again, another bullish chance. Now, you could look at other support levels here. Chances are it's probably not going to get back into the $4 or $5 late range, but that's kind of another way to look at it. Now, typically on something like this, on an explosion, I'd actually start looking to short this position. Unfortunately, I would not do it with just regular shorting shares. It's not the way I would do it. This one is also hard to borrow. You could see that right there. So shorting it is a little more difficult. I would rather short it more on looking at something like 38 days or even further out. It doesn't have weekly options, but something cheap like this, I'd go at the money, go something like between a $12.50 and a $10 range and do a buying a vertical right at the money. And this is kind of the option side of the trade. and I would look for this to kind of just go down. Like, let's say I'm risking $165 and I'm just looking for it to kind of pull back, and you're trying to collect maybe at most 85. So I'd probably just take it off for $50 of profit, right? So you're trying to collect about half. The spreads right now on this one are not really great, just because the stock is super cheap. So you could try and play with some of these spreads, but they're not amazing. Let's see, the risking 305 to make 195. Again, not the best. Let's try to go to July. Also not the best spreads, because normally what you want to see is kind of one, risking 100 to make 100. But here I'm risking 315 to make 185. So if anything, I would do something with a spread like this, like a more defined risk spread, rather than doing something more, single options or anything like that. A total defined spread. And in that case, you also are prepared to lose the full amount of that spread. Otherwise, these stocks like this can really burn you. So anyway, something like this would be more along the wheelhouse. So risking 300 to maybe make 200. And if it pulls back down to about $8 or something like that, you make, you take it off early, maybe make $80, because you just need it to kind of wiggle and just pull back, snap down even for a day or two, and then you just take it off. So anyways, that's what I would look at for something like that as a trading spread. Other than that, if you're kind of like happy, excited, go lucky about it, it's fine. And it can move. Like here, we've got a big move here. We've consolidated another big move. So it could do that. It could do the same thing. Like, look, the breakout's there, the volume's there. It looks clean. It could go here, pull back a bit, and break out back into the 20 from a technical perspective. From a trading perspective, I'd be a little careful chasing a stock that's already up quite a bit. From over here on the lows, we went up, and that's up like 237%. That's kind of huge. So, when you're really looking at it up $9-10, that's a lot. So, you're moving quite a bit. So here, yeah, about 9.13. So be a little bit more careful here and mindful of what happens in these stocks, is that they can move exceptionally well. They're speculative, and you can make a huge return. But unfortunately, a lot of them do simmer back down over time. So these are usually not huge longer-term investing vehicles. But if you're looking at kind of just the overall longer-term trend on this one, you can see it's kind of going here, going up, and then we're looking at this channel right here. So it's kind of in that wheelhouse of, hey, we're in that range or channel going this way. So we're hitting kind of the tops. And again, it could pull back and still kind of go in that range. So anyways, this is just a longer term trend for you. All right, I hope that helps, gives you a little bit more logical, rational understanding and explanation of this stock, kind of what's going on, and a little bit of some of the technical levels, and maybe the way I would trade it's probably with the option spread, a very risk defined buying a vertical, maybe on the put side right now because it's stretched. If it pulls back and you want to go bullish, then I would probably do again a call spread instead. And I wouldn't do single options because they just decay too quick. So that would be my personal approach. But again, you have to kind of determine what makes sense for you. Anyway, thanks for joining me. Enjoy the rest of the week ahead, and I will see you on the next video.